Good evening. This is the final presentation for Group 4, Accounting 621, Section 42. Our team members are Lucia Saron, which is a team coordinator and social analyst, Alexandra Quesada, timekeeper and ecological and legal analyst, myself, Samuel Gagiola, doctor of medicine, and Christian Rebata, a psychologist. This is our table of contents for today, starting with the depreciation policy. Depreciation was evaluated using a straight line method and double declining method. This to be able to compare. And then here we see the depreciation by straight line. Over here we have it calculated by double declining balance. And our key takeout in this situation, uh, given that the seasonal nature of Glenn's business activity, predominantly a low level of activity during the winter months, then the straight line would be the best option, such as to be more accurate and also have less impact on the first 2 years of operation on the balance sheet, since those years are expected to be unprofitable, as we will see later on. When it comes to financial reporting policy, we were looking for compliance with the three major financial regulatory frameworks in North America, which are the GAAP, ASPE, and IFRS. We looked for compliance mainly with the principles of transparency on all information that is financially relevant for making decisions, materiality, and also revenue recognition and portrayal in financial statements. Our recommendations here is to would be to comply with all of these relevant regulations, and also to consult a certified public accountant to make sure that the company is fully compliant when it comes to fiscal policy and financial reporting. Now, when it comes to working in progress tracking and in general tracking of the company's financial situation, there are several accounting tracking systems available in the market tailored for different kinds of business needs. QuickBooks is a suitable option, and these help us track the whole financial panorama, including the work in progress that was asked for in the assignment, which is composed well by the raw materials, direct labor, and manufacturing overhead. When it gets debited to the cost of goods manufactured account, then we get to see the value of the goods produced before being sold. Going over to marketing, our main recommendations would be to take advantage of the channels of online marketing and active engagement and promotion within the local community. In general, consulting a marketing professional could also be useful to gain a deeper insight into this matter.
Well, let's move to the financial forecast for the next 3 years. According to the budgeted income statement, there is a steady growth in revenue. This is excellent news for Glenn because it shows that he is a good track for the coming years. In fact, revenues are expected to reach $138,746 by 2020, which will allow Glenn to generate an operating profit of $12,462. This means, in addition to revenue growth, Glenn's business is also projected to be profitable during that period. The best part is that is accompanied by good cost management over the year's expenses have remained under control, which will allow Glen to continue growing sustainability. A key point to highlight is that the basement renovation project is generating the most revenue. This gives us a clear indication these types of projects should remain a priority for Glen in the future. In this slide, we have two key points to highlight. First, it's important to Glen to maintain a strong financial position to absorb the initial losses, especially during the first 2 years when no profits are projected. And second, it is recommended to have a certified financial analyst who can perform a sensibility analysis to assess how different variables may affect the business performance in the future.
Okay, I'm going to talk about CVP analysis from the chair segment. Glenn plans to grow and partner with his son-in-law Chino to manufacture custom chairs with indigenous design. An analysis is made as to whether it is worth pursuing this initiative as Glenn does not want to lose money and his desire is to honor the local indigenous population. First, let's talk about the key figures. The projection estimates 70 chairs will be sold at price of 100 each, with a variable cost of 25 per chair. This results in a contribution margin of $75 per chair, meaning that 75% of each dollar in sale will go toward covering fixed costs and generating profit. Now, for the fixed cost, we know the main fixed cost is Chino's salary, estimated at $3,000. But what does all this mean in terms of profitability? To cover all costs, at least 40 shares need to be sold, which marks the break-even point at $40,000 in revenue. Any sale beyond the 40 shares will generate profit, with a net income of $2,250 projected if 70 shares are sold. For margin of safety, there is a safety margin of 30 shares or 3,000, meaning sales can drop by 43% before reaching the break-even point and incurring in losses. For conclusion, this analysis shows that the project is viable and profitable, allowing Glen to honor the indigenous population while ensuring the business remains sustainable. We recommended to Glen to accept Chino's project because this will help him to honor Squamish culture.
Now I will explore some ethical considerations related to our case study. Well, Glenn's venture isn't just about beautiful wood products. It's about balancing profit with responsibility, and I will explore how the four pillars of corporate social responsibility could shape his path to success. Well, first of all, in the economic side, he could generate profits through the sale of handcraft wood products, ensuring financial sustainability for Glenn's business and supporting his family. Also related to the legal side, he could obtain necessary permits and licenses for business operations, ensuring compliance with zoning regulations and environmental standards. Related to the ethical side of it, engage in open and respectful communication with the indigenous community, seeking their input and approval for the use of their cultural heritage in his designs. And for the philanthropic side, he could invest a portion of profits in community development projects or initiatives that benefit the Squamish people, demonstrating his commitment to their well-being. Well, now I will talk about some ethical considerations of the indigenous community related to our case. Well, establishing and maintaining positive relationships with the indigenous community, particularly with the Squamish people, is paramount for any business operating on their traditional territory. This involves demonstrating deep respect for their rich cultural heritage, seeking their free, prior, and informed consent for any business activities that may impact them, and recognizing their inherent connection to the land. It is crucial to ensure fair and equitable compensation for the use of the resources or cultural heritage regardless of ethnic background. Well, and this is all of our presentation related to the case study. Thank you very much.